As Dominic Chu reported, energy is having a big impact on the broader market. Despite today's slight rise in oil prices, the overall trend has been lower, much lower, and most say prices still have further to fall. Well, that's good news for consumers. At what point is it bad for the economy? We're just talking a little bit about that, and Jackie DeAngelis now has more on it.
Crude oil prices have fallen nearly 30% over the last 3 months, the tumble catching many by surprise. Seasonally, crude prices climb in the summer, along with gasoline, boosted by demand from the summer driving season. But several factors changed the game this year. A global supply glut that doesn't appear to be slowing demand from Europe and China, as well as a stronger dollar, all pressuring crude.
It's really all about the oversupply situation. Many traders thought that the U.S. production would start dropping at this point because we've lost almost 60% of our rigs, but that hasn't happened. They've learned to be more efficient with the rigs they have online. OPEC, the same thing. You would have thought production would have dropped there, but now they're 31.5 million barrels a day.
When crude oil prices drop, the first thing consumers look for is a drop in gas prices, and those prices have come down at the pump 18 cents in a month. AAA saying the national average for a gallon of regular, $2.59. But why is crude oil down 20% in a month and gas prices only down 6.5%?
It's a matter of they need to whittle through the higher expensive gas that they bought for the summer. Get through that. Once we get into the winter gas, prices will drop significantly.
Consumers are saving 88 cents a gallon on gas compared to this time last year. And AAA expects prices to fall further this month, possibly to $2.50. They also say it's possible to see $2 gas again by the end of the year. It's good news for consumers, but bad news for crude oil producers. Big oil companies continue to try to reduce costs through layoffs, capex cuts, and many have said they expect the second half of the year to remain challenging. Stock market investors are worried that there will be a tipping point where low oil prices have a chilling effect on the economy that can't be balanced by low prices at the pump.
If crude oil stays in the 30s for a significant period of time, what that shows to me and other traders, investors, is that there's definitely some economic slack in the world, that the demand for crude oil isn't there. You're seeing it with China right now. In fact, their demand has been ratcheted back with all the problems they're having in their economy and their stock market.
Still, some analysts believe that if crude drops to the 30s, it won't stay there for long. But there are a lot of ifs in that equation. For Nightly Business Report, I'm Jackie DeAngelis.